how powerful is this rotation out of the safety stocks and into the Awaken America plays? Look at B&G Foods, which is a house of packaged food brands that you might recognize as Cream of Wheat, Ortega, Polliner, Vermont Made, B&M Beans, B&G Pickles, Pirate's Booty, or Green Giant canned and frozen vegetables. This is a stock that's been on fire for months as part of the COVID-19 stockpiling trade. Then B&G announced some incredible May sales numbers this morning with 50% plus revenue growth year over year. And they guided for much higher than expected numbers in the whole second quarter. Yet what happens after rallying this morning? The stock actually closed down 1 cent today. Hey, that's the rotation speaking. But does it really make sense to sell after such astonishing numbers and with a big yield? Let's take a closer look with Ken Romanzi. He's the president and CEO of B&G Foods to get some more color on how his business is doing and where it's headed. Mr. Romanzi, welcome to Mad Money.
Jim, thanks so much. It's such a pleasure to be here. I'm a big fan.
Oh, thank you, Ken. Okay, so you had an incredible period. You basically pre-announced today, and you had the best single March, last week of March in history?
It was a record sales week for us. It came after the last half of March of generating 90% consumption increases in the last few weeks of March versus the prior year. And it really has continued, not quite at 90%, but over the last 11 weeks, our consumption as measured by Nielsen's up 50% versus prior year. Okay. And as you can see, it's continuing into the second quarter with the first 2 months off to a great start at plus 57%. So our portfolio is just responding very well and right there for consumers as they're cooking and eating more at home.
All right, so Ken, we got to figure out how much is sustainable. People just decided, you know what, it's fun to be at home. How much is, you know what, I'm looking at these new Green Giant products like the cauliflower, which is quite delicious, and I want to pivot to those. And how much of it might go away just because it is fun to have a night out?
Well, first of all, we don't expect 60% growth numbers to continue forever. But we do look to the industry experts that are talking about how fast will consumers go back to restaurants. I get what I would say was, as long as people are going to be eating out a little less, as long as people are going to be staying home a little bit more and working from home, our portfolio is perfect, from Green Giant vegetables to breakfast more at home. The more people are at home, they're eating more at breakfast. So our Cream of Wheat hot cereal and our McCann's Irish oatmeal are still growing, even as we entered the warm spring and summer months, are still growing at 30 and 40%. So as long as people are going to eat out a little less and work at home a little bit more, we believe there'll be better post-COVID trends than there were trends coming into the COVID crisis.
Okay, so Ken, when I was reading the verbiage, some of the stories ahead of what happened with the pandemic, there were some people who were questioning whether you could maintain that large dividend. Had you not had this spurt, would it have been under consideration that maybe the dividend had to be cut?
Jim, we, as you know, this company was built to grow through accretive acquisitions of high margin, good cash flow brands and use a significant amount of that cash flow to return to shareholders. So management and the board, and as I became CEO, believe you me, the board made sure I was totally committed to the company's strategy of paying a significant portion of our free cash flow out in dividends. So while we ran in a little tightness last year because of working capital investments, we had a plan to both not just more than cover our dividend, but also begin to chip away at our leverage level because we got a little higher than what most people were comfortable with.
Yeah, well, you know, it's interesting. As you said, I studied the company for a long time. And the Green Giant acquisition I always thought was a steal. But what's happened with these lines extensions that you've done, and I know you're going to do more frozen, maybe keep canned, but it can be such a dominant brand. I wonder whether you need so many of the other brands. Do they take up too much of your, let's say, mental time?
Well, you know, that's a question that people have been asking me ever since I arrived at B&G. And, you know, we have a great stable of steady Eddie brands that are such consistent performers and generate a lot of cash flow. So we don't see many of them distracting us. And, you know, we're a serial acquirer. We don't have to hang out the for sale sign all that much. But Green Giant now is a significant portion of our business, a third of our business, and it's our largest brand. And we plan on it to continue to be our fastest growing brand. And as you can see, these new products, and you know, we love cauliflower. We think it's the magic ingredient. we're line extending and offering new products, not just to reinvent frozen vegetables, but to take plant-based vegetable forward products and go after carb replacement. So our veggie rice and our cauliflower tots, and now our new veggie hash brown and cauliflower gnocchi and pizza crust. These are all not just new vegetable products, but new products made from vegetables. And we're very excited about that pipeline. Hats off to B&G. I wasn't here when they did it. When they reawakened Green Giant in the fall of 2016 and launched those new products, those first new products since 2016 have cumulatively delivered over $500 million in retail sales. And that's just the first three segments. So our innovation pipeline, as far as the eye can see, is something we're very excited about. And the Green Giant brand can really carry it off.
Now, some of them, I mean, I happen to love the old London because I was growing up and that's what my mom served. And I love all the different flatbreads that you have. But I thought that this back to nature was very much in keeping with what I'm seeing with Beyond Meat. So you've got whole ends of the supermarket now that you have a good placement in.
You know, Jim, we're actually in over 80% of households, at least one B&G brand. We are in actually every food aisle of the store, and actually one non-food aisle. We actually have Static Guard. That's our one non-food product. Right. So we're in every aisle of the store. We're in a lot of households, and we're just beginning to scratch the surface of how we can cross-promote products. So, for instance, we'll be launching a line of Green Giant frozen vegetables made with Mrs. Dash inside. So you don't even have to add it on your own. So there's so much more we can do with this great portfolio of brands. And not all brands are going to be traded equally. We're going to really lean in on about a half a dozen of our brands to drive growth, like Green Giant, Ortega, Mrs. Dash, Back to Nature. And then there's a whole bunch of brands that are just steady Eddie that are maintenance, that turned into very high consumption during this crisis. And we're hoping now can show a little bit more organic growth in the future than they had in the past, because we are seeing that new households are entering into our franchise and they're repeat purchasing. So what we've seen, other than that little blip in March, we're not seeing pantry loading. We're seeing car loading, refrigerator and pantry loading, and then consumption and back for more.
Well, I like that. Stock hit a high today. It's got 8% yield. Ken, it's so great to have you on. We had so many people ask you about the stock for a long time. We didn't know enough. Now we know, and it's great to see you. Thank you so much, Ken Romanzi, President and CEO of B&G Foods. Good to meet you, sir.
Thank you so much, Jim. A real pleasure.
Well, guys, look, it's in my house. It's in my executive producer, Regina Gilgan's house, and I think that some of these products are here to stay. Many of them, and many of them have always been here. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.